Hey guys, how's it going? It's Philip at Trade Genius. In this video, I wanted to discuss the futures contract expiration, the CME, Chicago Mercantile Exchange. This is the big contract, the large size futures contract, the one with the most weight. It expires on August 31st, which is Friday, today. And so I wanted to kind of go over that, what the previous price action has been like and what to expect. So let's dive into that on this video.
Trade Genius.
All right, as we look at the Bitcoin price chart, I want you to notice we got our long signal and our new DTMM signal, and that signaled really nicely right before this bounce happened that we're currently in. So if you guys want to get this software, it's going to be coming out here really soon, next couple of days, but you can head over to Trade Like a Genius, take advantage of our fall special here for $3.99. That's an annual subscription, chat room, crypto, binary options. We'll throw in that indicator with that package for you guys. $3.99. Check it out. Okay, Bitcoin. So if we go back to the chart of the daily, and actually we can look at this chart here, 4 hour. 4 hour I think is a little more detailed. These are the last two expiration dates. We've got June 29th and July 27th. The guys over at Brave New Coin did a nice infographic. This is the CME futures contract dates. So the last two expirations, and they will overlap. There's an expiration going forward every month, but these do tend to overlap. Some of them have long duration, some of them shorter durations. And so the last, basically what this is showing you is start and end of the contract. So we had one, a long one that ended on June 29th, and we had another one that ended on July 27th here. And then so the next one's ending today, August 31st, Friday. So a lot of times people have been like, no, there's a lot of pricing shenanigans when we get into those expirations. So let's look at the last couple. And sure enough, as we head towards expiration, we see that we got some volatility heading into that. So this is the day of the expiration, the 29th, and this is the day before. This is a 4 hour chart, and you can see we had a price dumped into it. Now what's interesting is that price also bounced pretty heavy and continued to bounce higher after the expiration. Again, we see this over here on the July 27th expiration. We see a large dump into that the day before, but we also see a bounce after it. Now we were cycling, this was the top of the trend line in this area, and we rolled over. So like bad memories, I think, on the previous expiration, because we rolled over and made the previous high at 8,400, and then we rolled over. But I wouldn't attribute this whole move down to the expiration, the futures expiration, just like I don't attribute this whole rise from this futures expiration. I focus more on the action right up before it and after it. So what we've been conditioned to see now is that we get a dump into it and then a bounce after. Now, these moves here were more along the lines of the macro moves that we were seeing, primarily on, like, more visible on this chart. And really we were just bouncing off support and resistance. And on the upside, this 200-day moving average has really been keeping a lid on this. The other thing too, that we can look at going back to our 4 hour chart is what we are heading into currently. And so if we fast forward now to current time frame, we got our linear regression up here. This is a bottom trend line that we're holding, but notice we're starting to pulse higher here. And for me, what's key here is to take out this prior high. Now that's kind of what's in play. We don't want to see a double top there. We want to see that taken out. And this is at 71.39. So by the time you see this video, hopefully we'll have something decisive at that point. But taking that out is going to keep us in line with our analog chart. If we look at our analog chart here, you notice that this is our comparison to our previous chart that we've shown you guys, which is a 4-day of the 2014-2015. And the reason why it's 4 days is because things are happening faster. I'm going to cover that on another video over the weekend on why that is, and show you kind of like the macro parabolic outlook for this, but it would explain why you switch to a 4-day chart and it lines up. Again, this market structure is psychology. So if we zoom in down here, basically this arrow represents this move here. So I just kind of wanted to draw it on the chart so there was some sort of semblance of structure. And so as you can see, we're kind of hugging that line. So we'd want to see this to continue. What would be key here is a break back above this previous high of 71.28. So we didn't really see too much of a dump into this move into the 4-hour chart. I mean, a little bit, but not like we saw previously on the other expirations. So this has been kind of par for the course, and so we should see a sustained bounce now beyond Friday into the weekend is what we're looking at. All right, so there you go. We did get a decline, but we usually haven't seen a bounce the day before. It usually declines into the date of the expiration, and then the day of the expiration we start to see a bounce. If this bounce sustains, then we've just kind of seen that happen a little sooner. So some similarities, but a little different. But we would continue to expect to see a move higher through the weekend. So anyway, I thought I would share that with you guys. There's a lot of noise bouncing around about manipulation or what happens around futures expirations. A lot of times it's just people taking hedges off and things of that nature. And it doesn't always have to be a conspiracy theory when it comes to that stuff. So futures markets don't have a lot of volume yet, so that's the other thing to keep in mind too. But largely, I think they're used as hedging instruments for people that are taking positions into Bitcoins, even businesses that take positions into Bitcoin. If you've got, like, say, Circle Pay or something like that, they have to have a certain amount of inventory on hand to dole out to people that buy and put it into their accounts. But they may want to hedge their position long or short, depending on what they're buying as far as what they need to have on hand, and hedge those positions against any drastic price moves. So it kind of cancels each other out and helps with their dollar costing. So anyway, just thought I would share that with you guys. Always appreciate you guys watching our videos. Please hit like and subscribe. If you're on mobile, ring that bell, and I'll see you on tomorrow's video. Take care, guys. Bye.
Trade Genius.